Good evening and welcome back everybody to episode 38 of Quickfire Crypto, where we keep you informed on a bi-daily basis. If you're interested in keeping up to date on all things crypto, then subscribe to the channel. We put out a new video every 12 hours. So today we're going to be talking about Genesis, which is the brokerage arm for the sister company Gemini, run by the Winklevoss twins. And this is about regulation again, and US regulation in particular. So let's jump straight in. This is an article I found in Cointelegraph, and it's written by Ana Paula Pereira. Alabama and several other US states are investigating alleged securities violations and connections with retail investors. So it's important to know that Genesis has not filed for bankruptcy yet, although there's a lot of speculation and a lot of guessing that they will. There's no. They've actually said that they're not intending to file for bankruptcy. Cryptocurrency lending firm Genesis Global Capital and other crypto firms are under investigation by securities regulators in the United States. That would be the SEC. According to reports on November the 25th, Joseph Borg, director of the Alabama Securities Commission, confirmed that its state and several other states are participating in inquiries regarding Genesis's alleged ties to retail investors, including if Genesis and other crypto firms might have violated securities laws. Barron's reported it is still unclear what other companies are being investigated. And it's important to note that there are a lot of regulation around, not crypto-related securities, but just securities in general in the US, and in many jurisdictions across the globe, actually. But in the US, they have rules for retail investors like you and me, and they have rules for accredited investors. And they make it such that a lot of IPOs and early stage investments can only be made by accredited investors, which is institutions usually or almost always, with certain licenses that can trade securities, and so it sometimes people complain, retail investors in particular, and the little guys complain that actually they don't have access to a lot of the investment world. It's only open to accredited investors, whereas the SEC, which is the main regulator of securities in the US, argue that it's there to protect retail. It's there to protect you so that only accredited investors get involved, because the risks are too great and that retail investors usually don't know what they're doing. And so if they lose money, they're going to complain and there's going to be problems. The investigation is another chapter in the Genesis saga, since the company revealed it had around $175 million worth of funds stuck in an FTX trading account. On November the 16th, Genesis announced it had temporarily suspended withdrawals, citing unprecedented market turmoil following FTX's collapse on November the 11th. So even though they haven't filed for bankruptcy yet, Genesis, they have suspended withdrawals, and they are saying that it's temporary. It's been temporary for a while now. It's been over a week that people cannot access their money. If you've got money on on this brokerage, you cannot withdraw right now. And they've also paused the lending part of their website. So you can't loan your money out on their website anymore, and you can't withdraw. The firm is reportedly facing difficulties raising money for its lending unit. However, Genesis has refuted speculation of its imminent bankruptcy due to a $1 billion shortfall. It was initially $1 billion. They've then changed it since. I saw 3 or 4 days ago on Twitter that they actually only needed $500 million now. So just a measly $500 million is all that's needed now to help the company out and keep it solvent. That's what they say. I personally don't believe anything that I just don't trust anybody that runs exchanges, and I don't think anyone does it. Trust is at a real all-time low in the crypto world at the moment because of the whole FTX thing. So we have no plans to file bankruptcy imminently. Our goal is to resolve the current situation consensually without the need for any bankruptcy filing. Genesis continues to have constructive conversations with creditors. And what looks like they've done here I can't say for definite because I don't know. It's very opaque. But what it looks like is that they have done a very similar, it seems to me, thing to FTX, in that they have used users' funds to try and get yield on those funds, to try and make some kind of return on it, and that's not allowed. So if they have done that, I would suspect that's what the securities regulators in the US that are going for Alabama State and the other ones are going to be interested in, because that's not allowed. You can't just go around using users' funds to, you need a banking license for that, basically. That's how a bank operates. Exchanges and brokerages should be making profits on fees only. They should not be looking for yield. It introduces new risk, and it's new risk where they don't have to risk. They're risking the users' funds. They're not risking their own money. So it's wrong, and usually it's deceitful, because the user doesn't even know that. If you've parked your money on Genesis, you don't even know that Genesis is doing that. You don't expect an exchange to do that. You expect the bank to do it, because we all know that banks lend money out, and they take your savings or your deposits, and then they lend them out, and they make a profit on the yield. But you don't expect that of an exchange. Moelis & Company, an investment bank, has been hired by the firm to explore options, while people familiar with the situation emphasise that no financial decisions have been made and that the company may still avoid bankruptcy. Genesis has been in the spotlight due to concerns of a contagion in the industry as a result of FTX's bankruptcy, along with its sister company Grayscale Investments and their parent company Digital Currency Group. A tweet from Grayscale on November the 18th reassured investors that all digital assets underlying Grayscale's digital asset products are stored under Coinbase's custody, citing a letter from Coinbase's Chief Financial Officer Alicia Haas and Coinbase custody CEO Aaron Schnarch. And we all, as we know, Coinbase is probably the only major company that's actually publicly listed. So actually all their finances really do, their balance sheet every month is out for the public to see. So it's one of the only, probably, if not the only company in crypto that's public, or the only exchange I should say that's public, so you can actually see what they've got and what they're reporting, because they are obliged by the regulators to report on what they hold I believe it's every 30 days they have to do that. So everyone knows what they've got and what they haven't got, so everybody sort of knows that they are solvent. So I think that's why Grayscale is sort of trying to introduce Coinbase, because Coinbase are very trusted only because they are forced to report by regulators on their assets and liabilities. So Grayscale put all digital assets that underlie Grayscale's digital asset products are stored under the custody of Coinbase Custody Trust Company LLC. Read more from Coinbase's CFO Alicia Haas and CEO Coinbase Aaron Schnarch, which they've got looks like a mini balance sheet there. So that's what I've got for you today. Remember everybody to subscribe to the channel, join our team, we'll keep you updated on all things crypto every 12 hours. Smash the like button if you feel you got value from this video, and I'll see you all in 12 hours.